Hey everyone, and welcome back to another video for today. So it's already the month of November, believe it or not. There are only 2 months left in 2025. And so we're going to talk about 4 stocks that are worthy of being on your buy list or maybe a watch list. Of course, there are plenty of other stocks that we can talk about, more specifically the one and the only PayPal. Of course, we are not going to touch on PayPal in this video yet again, because I know that a lot of you are bored of me talking about probably one of the best risk-reward plays in the market. You can disagree with it, that's fine, just don't buy it. In this video, we're going to touch on these 4 companies. I do hope you keep watching, and if not, at least leave me a like and a comment, and maybe let me know what you're planning on buying in this lovely month of November. Without further ado, hit all the buttons, really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And of course, a special thanks to Fiscal.ai for sponsoring this video, stock research platform that you're seeing on this channel every single time. There's a link down in the description and in the pinned comment. You'll get 15% off. New users can get 2 weeks of Fiscal Pro for free. Everything that you're going to see in this video is, of course, powered by this platform right here. And so let's start off with Rubrik. Rubrik is a small, although now a bigger position in my portfolio, cybersecurity name, one that is growing quite quickly, one that did go public not that long ago. They went public mid-2024. It's a company worth just under $15 billion. And yes, they are experiencing a drawdown right now of 25% since the peak, let's say, earlier this year. Now, usually I do refrain from talking about companies that are yet to report their quarterly figures, but with Rubrik, we still have some time until they report their next quarterly figures, and I do think that the price that we're paying right now for this fast-growing company is worth it. Now, Rubrik did take a hit last week when Varonis and I believe Commvault reported their own quarterly figures. Not that great. Varonis missed completely, and I believe Commvault missed on the profitability side of things. Commvault is one of Rubrik's competitors, and so here the market again punishes the peers. Although I do still think that Rubrik is a better company, and they'll show it the next time they report their quarterly figures. Now, if we go and have a look at Rubrik's growth and expected growth, the next quarter revenue is expected to grow 27.9%, then 25, 23.5, a bit less than that. And then we see it apparently in October of next year, we see growth come back to around 24% or so. This is still, in my opinion, a fast-growing company. Yes, it's not profitable, although it does generate free cash flow. As you will see, it's not profitable just yet. Gross profit goes up and to the right, same with gross profit margin, but here you can clearly see gross profit margin is not really an issue. Free cash flow margin has been improving. Last quarter that was 17.9% over the last 12 months. Operating margin still very much negative, almost 40% negative. That is solid improvement, but like I said, we're still far away from this being really a bottom line profitable business, but they are generating, of course, free cash flow. We've seen that with a lot of other cybersecurity names. For example, CrowdStrike, much bigger, but CrowdStrike has been generating quite a lot of free cash flow for quite a while. Free cash flow margin is quite high, but yeah, operating margin, I think for CrowdStrike, I think we looked at it last month or so, still negative or close to break even. Then if we look at cloud annual revenue, then if we look at Rubrik's cloud ARR here, grew 57% first quarter, last quarter above $1 billion. Customers with subscription ARR above $100,000 still growing 27.2% to $2.5 billion. And then overall subscription annual ARR grew 36.3% to $1.25 billion. When you look at the guidance, Q3 and fiscal year 2026, for Q3, they're expecting total revenue to come between $319 to $321 million. Subscription ARR contribution margin of around 6.5%, but they do expect Q4 to be higher than Q3, which is also why we're seeing here 7% approximately for the full year 2026. Non-GAAP EPS still a loss, and then for the full year 26, we see free cash flow between, well, let's call it at $150 million at the midpoint. I've previously spoken about Rubrik more in depth when I started to open a position. So if you want to learn more about that, that will be in the top right corner. It plays a very strategic role in this whole cybersecurity name, right? We've talked about the prevention players, right? The Zscaler, CrowdStrike, Palo Alto, which by the way, Zscaler, CrowdStrike, Okta are all partners of Rubrik. Rubrik is more in the resilience side of it. So once the prevention fails, which as we've seen, they fail quite a lot, then that's where Rubrik comes in, right? We've seen a lot of hacks happen. We've seen a lot of data that have been stolen, and then the company either loses the data, has to pay millions of dollars to get that back, everybody's exposed, etc., etc. Well, Rubrik is playing that role. They are making sure that, okay, once, let's say, the prevention stage has failed, we are here to help you, right? You might get hacked, but we're making sure that you will not be held for ransom, basically. And of course, if you want me to make a specific video about Rubrik, an updated view, do let me know in the comment section below. And right now, if we look at the weekly, Rubrik does sit under the 50-day moving average. Previously, well, the last time when it started here back in April 2025, we did see a nice rebound on it. This time we are below it. We did try to go back above it, but right now it's the start of the week. Let's see what happens over the next coming days. The expected earnings date is start of December. Moving on to name number 2, and again, this is one that is quite controversial right now because it has been taking a big hit because of the, well, rise in prediction markets, and that's DraftKings. As you can see, DraftKings, year to date since its peak, has a drawdown of 42.7%. DraftKings will report their quarterly figures this week. It's a company worth around $15 billion. This is a company that's very interesting right now because we've seen MGM report, I think a week or two ago. BetMGM is doing quite well despite all of the prediction markets. DraftKings has also announced something more recently to tackle this prediction market, well, drama. And that is this. DraftKings is going to acquire Railbird to advance future growth in prediction markets. By the way, Railbird, their clearinghouse is Polymarket. So that's also an interesting aspect that has been, well, overlooked, I would say. But here, yeah, we are still, again, the prediction markets is still a gray zone, right? Regulation-wise, it's still a gray zone. But this is a move by DraftKings to make sure that they are going to play in that new, let's say, an expanding market. If it gets regulated, okay, I mean, DraftKings is there, Railbird is there, they're going to probably win. Also, with the prediction markets, a lot of these things, again, we've seen the volume, right, on Kalshi, on Polymarket, we've seen that on Robinhood as well. The volume is there, especially for the big events, there is significant volume. But if you really look, first of all, the insane rise of gambling in the United States is maybe something to be studied. I did see a new CoffeeZilla video talking about the whole rise of gambling and all of that. Very, very interesting. But a DraftKings, for example, when you go there, you can make very, very specific bets. I don't think that with the prediction markets, you can make specific bets for a football game or a basketball game or a baseball game. It's usually like binary outcomes. Like, is this going to happen? Yes or no. When you look at sports betting or whatever, you can say, oh, the amount of goals that are going to be scored, the amount of, I don't know, other sports terms that you throw for baseball or whatnot. All of that happens with DraftKings. It's very, very easy. Same with BetMGM, etc., etc. I don't know if the prediction markets can do exactly the same thing. But yes, I would lie if I would say that prediction markets are not rising and probably, I would say, expand the market share while also taking a little bit of market share. And this is why this announcement right here is a big deal. Now, in the meantime, what we get is this. What we get is DraftKings that is still growing and expected to grow 33.8% for this fiscal year. And then currently the expectations are for growth to decelerate to 18.6% and 15.7% for the next 2 fiscal years. Free cash flow is expected to grow much quicker than that this fiscal year and the upcoming 2 ones as well. They're expected to generate $1.74 billion in free cash flow by fiscal 27. Now, if you look at how they generate revenue, majority here comes from sportsbooks and then iGaming. Okay, last quarter, they increased revenue by 36%. 3.9%. Now, this is one of the, let's say, warning signs, right? You see here average monthly unique players peak December quarter and then drop quite heavily. But we've seen that before, right? We've seen the December quarter usually peak a little bit and then we go down. Although this time we went down quite drastically. But at the same time, you're also seeing average revenue per monthly unique player go up quite drastically. There is also a seasonal aspect to it, right? Because in some quarters you have bigger events than in others. Some leagues end before another quarter starts. So, okay, that's always going to happen, which goes back to the prediction markets, because with prediction markets, I guess you can gamble on any event that's happening, right? You don't need to focus only on the football season or on the baseball season or on the MLS season or NBA or whatnot. No, you can focus on elections, on government shutdowns and things like that. And so the money continues to flow into those markets. And so we'll see. We'll see what happens in the upcoming quarters. If monthly unique players continue to drop, then I would say that yes, there is here a significant issue. But if we suddenly see it pick back up again, plus we get some positive commentary with regards to the prediction markets for them, then yes, I do think that this is one of those names that have been hit quite heavily and maybe a bit too much. Because if we look here at gross profit margin, if you look at free cash flow margin, up and to the right, it's been going in the right direction for quite a long time. And I don't think, unfortunately, that gambling is going away, especially not sports betting. I think it's becoming huge in the United States. Unfortunately, a lot of people do gamble these days, maybe because they're trying to get rich quick because they need the money. But yeah, over the last, I think it's fair to say that we've all noticed the rise in gambling over the last couple of years. And so right now, when you look at the chart for DraftKings, triple bottom in the making, little rebound here on the 200-day moving average going into the earnings report, which is going to be Thursday. I mean, this could be one heck of a play, right? If the numbers are better than expected, if guidance is better than expected, if comments with regards to the prediction markets are also maybe better than expected, then yes, I could see suddenly a huge green candle here. And by the way, for those that own Robinhood, I mean, Robinhood is basically a casino, and with prediction markets and whatnot, they basically added an extra player. Wonderful business. Moving on to probably a no-brainer for the month of November, and that's Meta platform. Meta has come down after the last earnings report, which happened last week. Year to date, it's now only up 5.7% and is currently experiencing a 17.5% drawdown. Of course, if you want, you can have a look here at the transcript and go over the whole earnings call, the report, and of course, also these slides. I mean, if you want to look at some impressive stuff, this is basically it. This is an insane business. Operating margin currently 40%. Okay, operating margin 40%. Return on invested capital, I think, is close to 30% or so. If we look at net income has come down quite drastically, but here again, non-cash income tax charge to provision for some income taxes of close to $16 billion. So the big EPS miss was because of that. If you exclude that, the EPS would have been a beat, quite a comfortable beat. Now, of course, the whole story here is about CapEx. People are scared that this is again Mark Zuckerberg being, 2022. The whole metaverse story. CapEx is increasing and is expected to increase even more in 2026. But, I mean, family daily active people, 3.54 billion. 3.54 billion. It's insane. This is insane. If you think that this is a business that will not manage to monetize this huge user base, you have not been paying attention. You have not been paying attention. Mark Zuckerberg, in my opinion, is one of the GOATs CEO out there, still one of the only founder CEOs as well in those huge big tech companies, and is still very, very young. And so if we look at revenue growth expected for this year and the upcoming years, again, all powered by Fiscal.ai, for fiscal 25, 19.1% growth, then 16.1% and 13.8% growth in 2027 to reach close to $260 billion in revenue. Family daily active people over the years, I mean, since 2019, this has grown at a compound annual growth rate of 8.1%. Some people here thought, who who uses Facebook anymore or any of those apps? Well, clearly more and more. Clearly more and more. If we then look here, I mean, gross profit margin 82%. Free cash flow margin, of course, goes down as CapEx does increase quite a lot. We've seen free cash flow come down, but then apparently it's expected, well, not apparently, according to the analyst, it's expected to, well, slow down its decline in 26 and then grow 32.3% in fiscal 27. I mean, if you look at CapEx over the last couple of years, you can see clearly the huge increase, which of course affects free cash flow margin. Now, the issue for the quarter was this. 2026 expense guidance was raised. OPEX was largely the same. The language was that, well, previously it was a bit like 2025, so they're increasing like 2025. But now the language has shifted to a more aggressive tone, meaning they're going to spend a lot more, a lot quicker in 2026. And again, the market right now is asking a bit more questions about those investments, about the return on those investments. But with Meta, how can you ask those questions time and time again? Have you not learned your lesson? Right? Okay, in 2022, first of all, 2022 was a horrible year for the whole market. But in 2022, yes, of course, they were focused on the metaverse. Although the shift to the metaverse probably made them an early adopter of all of these data center build-outs and GPUs, right? Because a metaverse or not, you needed a lot of GPUs. And that's exactly what has happened. Right now, I don't know who's doubting Mark Zuckerberg and the team. Plus, they did tell us this. Almost every week, people come to us from outside the company asking us to stand up an API service or asking if we have different compute that they could get from us. We haven't done that yet, but obviously, if you got to a point where you overbuild, you could have that as an option. The very worst case would be that we effectively have just pre-built for a couple of years, in which case, of course, there would be some loss and depreciation, but we'd grow into that and use it over time. I put here a MCS, like an AWS Meta Cloud Services incoming. I don't know, but this is, I think, the second or third time that they've talked a little bit about that. Of course, analysts are pushing those questions for them to answer it, but wouldn't surprise me. It would not surprise me. And so right now, if you look at Meta here on the weekly, it is under the 50-day moving average, which sits at around $664. On the daily, we can see that we are oversold. Right now, we are also under the 200-day moving average, but on the daily, we are oversold. Lastly here, and that's Transmedics. Transmedics was also a stock that I talked about before the earnings season because, well, first of all, the stock is now back to levels not seen since before the earnings. After the earnings, the stock did pop, so we're back here at $4.5 billion or so in market cap. At the time of making this video, we're at $122 per share, down 7.2% on the day. Year-to-date, stock is still up 84%. Now, Transmedics, as you can see, is still growing quite rapidly. Yes, this quarter is usually a seasonal weakish one, which is why you're seeing the growth here or the revenue drop quarter over quarter, but that still grew 32.2%. This quarter, gross margins 58.8%, still up close to 3% year over year, but again, down quarter over quarter. Same with operating margin. That's because of seasonality. As for the rest here, we have product revenue increasing 33.1% year over year, services 30.9%, owned aircraft 21. I do believe that in the earnings call they said they already have 22 and they're piloting double shifts for those aircraft. Of course, the more they can use them, the better it will be. Net income up $20.1 million year over year, down 10.6 quarter over quarter. Cash pile is at $466.2 million, up 65.6 quarter over quarter. This is basically the picture for, let me actually remove myself right here, Q3 and year-to-date 2025. They've been performing quite well despite a lot of skeptics around this name. Then as for comments during the earnings call, kidney transplant represents the single largest addressable organ market for the OCS technology. The design for the OCS kidney device is anticipated to be unveiled in early 2026, at the American Society of Transplant Surgeons Winter Symposium. The program will involve a significant revenue-generating trial in the United States and possibly internationally. Crucially, this trial is powered for superiority, aiming to prove better outcomes than the current standard of care. The success of this trial is expected to drive substantial growth, potentially helping the company reach 20,000 annual transplant by 2030, a major increase from the current 10,000 milestone goal. But I do believe that, was it 10,000 by 2028 or was it 8,000 by 2028? One of the two, let me know in the comment section below. The Centers of Medicare and Medicaid Services, CMS, is the sole payer for end-stage renal failure in the United States. CMS is expected to keenly observe the trial due to its potential for cost efficiency, improved outcomes, and higher kidney utilization. Then, as for expanding the successful US NOP model outside the United States, that's a key midterm growth driver. Transmedics is launching its first ex-US NOP program in Italy. The Italian NOP program is expected to launch in the first half of 2026. The company is actively establishing up to 4 hubs to cover strategic locations in northern and southern Italy and is building an EU air and ground transplant logistics network. Now, the international initiative is projected to serve as an additional growth catalyst beginning late 26 and more meaningfully in 27 and beyond. Investors should note that initial investment in the international network may cause near-term pressure on gross margin, which makes total sense, but these margins are expected to normalize as volumes scale. And lastly, success in Italy is viewed as a crucial precedent for further expanding into several other European countries and regions outside of Europe in the coming years. And so if we're looking at the stock right now, like I said, after the earnings, we had a solid reaction. We tried to go above that downtrend line that started quite a long time ago. Clearly it failed, and now we're back here. We did touch that 100-day moving average. Now we are here at this area, $122 on the daily. Quickly look at the weekly to see what's going on there. We're still well above the 100-day moving average. And so all in all, that's about it for me in this video. Of course, there are plenty of other names out there that are worthy to look at. I think a Sezzle, a Shift4, still a PayPal, a SoFi, in my opinion, still no-brainers at these prices. And the list probably goes on and on and on. But I wanted to choose those 4 names because 1, I got a lot of questions about them. 2, some of them reported, like a Meta. I think a Meta, huge name, might be in the same category as a Google in the 140, 50s or so. So all in all, that's about it for me in this video. If you enjoy this type of videos, hit all the buttons. We really appreciate that. Check out fiscal.ai down in the description to get 15% off. And I'll see you all in the next one. Bye-bye.